Good day, everyone. Well, the ex-CEO of the NASDAQ said a few years ago that in 5 years, all stocks will be tokenized. Well, he's not far off the mark. Binance Exchange will list the Coinbase stock as a token on its exchange. So when customers buy Coinbase stock, Binance, which is on our crypto list, then must buy the stock from the NASDAQ exchange to keep it at 1-to-1. Binance trades more than $50 billion daily versus Coinbase, which does not even trade $5 billion. So given that Binance trades more than 10 times the daily volume of Coinbase, this could have a market effect on the buying pressure for Coinbase stock. Binance also has its own blockchain called Binance Smart Chain. It charges pennies on the dollar for transactions compared to Ethereum. So many projects have consequently moved to Binance Smart Chain. Now, the CEO of Binance, CZ, he's one of the most forward-thinking minds in crypto. I think that's a fair statement. So it's no coincidence that Binance has become the leading exchange by far in the crypto space. When Binance lists or invests in a coin, it tends to do very well. If history is any guide, their listing of Coinbase stock as a token will probably push the price higher, and this move to tokenize stocks comes at the perfect time as it coincides with the first blockchain company listing on a major stock exchange. So this is sort of like the Netscape moment back in 1996 when Netscape was the first internet to go IPO. Now, Binance is currently valued around $84 billion, while Coinbase has a valuation around $87 billion. And the listing of Coinbase stock as a tradable token on Binance will ultimately push Binance tokens higher, since what's good for Coinbase is also good for Binance. Now, we had a few recent FAQs that I wanted to go through. They're kind of general. First one asks what we think of market moves in a, why we think the market moves in specific manners. A very general question. That was the intention, really. And I mean, we discuss market movements in our books and FAQs of this website, and it's a complicated answer to a simple question, since if it were easy, everyone would know what to do. The market is designed to fool the majority of investors the majority of the time at critical turning points. So this is why trading sell volumes spike near major market lows and buy volumes spike near major market highs. So a lot of people tend to buy high and sell low. That's the general trend, and investors all too often let their emotions guide their trading, and that accounts for the sharp V bottoms that we see at major market lows as FUD rules the day and traders exit in a panic. Likewise, FOMO rules the day when it comes to major tops as traders rush in to buy for fear of missing out. And the cycle repeats every time, and as a consequence, something like 80% of investors lose money in stocks, options, and futures. I think 10%, roughly 10% break even, and 10% make money. And I think this is a pretty true statement in crypto, although in crypto, I think the numbers are even more skewed because the volatility is that much greater. And so you see these, when you see a spike, like a sell spike or a buying spike, it's quite pronounced. And I mean, I know a running statistic was that more than 90% in crypto lose money. I heard at one time as high as 97%, but those are probably earlier days where you had just tons of unsophisticated investors piling in and trying their hand. And the other problem, of course, in the earlier days, you had all these hacks and exchanges being taken down and people get wiped out overnight if those things happen. So I think, you know, more in rhythm with today's market, I would probably put the number at 90% of crypto investors lose money over time. Next question is, what are your thoughts to special issues? For instance, why does Fed Chair Powell influence the market? Well, again, we discussed this in detail in some of our market lab reports. Easy or tight money policies can impact markets depending on where one is in the cycle. And again, the answer is not simple. And monetary policy, inflation, interest rate curves, and the economy all influence market direction. Next question, why does a specific formation wake your interest? Well, he's talking about chart formation. Charts are human nature on parade. Bill O'Neill always used to say that. And on a risk-reward basis, certain formations have shown themselves to be profitable, such as undercut and rally. And that said, the only constant when it comes to markets is change. So the pocket pivot, which I observed then formalized in 2005, it continues to work, but the suggested entry point has changed for those who've been subscribing for a number of years. Way back in 2005 and the years after, for a few years after, markets were not nearly as distorted or noisy. So buying on strength was your best strategy. Stocks with sound pocket pivots would, and along with strong fundamentals, would often not pull back if one did not buy on that day of strength. But after 2008, the market changed due to distortions created by QE, which affected the entry points. It unbalanced it rebalanced the risk reward. So by 2012, 2013, buying on a constructive pullback was a better strategy as one's risk was then reduced. Meanwhile, missing a trade became less likely as the noisier market often created entry points on pullbacks after the stock had its pocket pivot. Gil, how are you seeing everything?
Yeah, I'm treating this market in typical 360-degree fashion. What I find interesting here is that the indexes are melting higher, and they've been doing it for the last couple of weeks on very light volume, which is kind of interesting because it just shows you that you have some very narrow leadership. They're piling back into big stock NASDAQ names. So if we look at, for example, some of my groups here, I'll pull up the big stock NASDAQ names. And let's see, percent change. And so you can see NVIDIA's, since they raised guidance the other day, they've been pushing higher. They're breaking out here. I'm distrustful of buying breakouts in this market, however. Qualcomm is another name that's a big stock NASDAQ name. It's not rallying, but it's holding along the 20-day line. Apple's trying to push higher. Facebook is trying to rebound after getting hit yesterday. Netflix trying to rebound after getting hit yesterday. But you can see that over the last 2 weeks, most of these names have been pushing higher. And in a lot of cases, you can look at the Microsoft chart right here, and you'll notice that there's no real volume on it. It's just drifting higher. So it's essentially melting higher. And I think, you can play things long or short depending on the setups. And I think that's primarily the way to operate rather than having some sort of macro view. The interesting thing is that a macro view on the indexes that is bullish is the correct position right now, despite what we're seeing underneath the surface, which to me looks a bit fishy. And so, I don't really look at this as a market where there are any strong big money trends. I'm just taking trades where I can find them. And that means taking advantage of news generated price velocity. So for example, this whole Coinbase thing, it's pretty fascinating. I mean, it's a cryptocurrency exchange. I think there's going to be more competition. It's not like they own a bunch of crypto or anything. They basically serve as the exchange. Is there a huge growth opportunity here? I think it's more of a speculative play because if you're going to really value this, you have to value it in terms of, how much was the NASDAQ able to grow as an exchange once it came into being? Is there potential to expand? The NASDAQ got more and more listings over time. Initially, it was distrusted. It was considered over the counter. And I remember when I started in the business, the old timers at the Merrill Lynch office in Beverly Hills, where I started, they would come over to my desk like, what are you messing around with those unlisted OTC stocks for? So it didn't have credibility. So, when you're trying to compare all this, I think that right now this is mostly a speculative splurge, and it'll do what it's going to do. I can't really tell anything right now because you're only 2 days into this. But if it sets up, I have nothing against buying it if I think it's going higher. And conversely, if something is moving up here and setting up as a short, even if it's related to this, because I don't think crypto is the be-all, end-all of eternal upside. I think there's going to be corrections, and some of these names have some limitations in their business models. For example, let's go to my crypto group, and you see something like Mara. As I said, this is a short. This was a short yesterday. It looked like it was posting a pocket pivot on I forget what day we put a report out, but that failed very quickly. So if you bought that, then you should have been selling right away. And I put out a Voodoo report over the weekend. I don't know if all of you subscribe to the Voodoo report, but I rarely put reports out with that. And when I do, it's because I found something I think is significant. And in this case, it was getting into these names, Riot and Marathon, and also Silvergate, I think is the other one. Getting into these earlier in the week, okay? And the one that was really in the best position was Riot, because it was sitting right at its 50-day line right here, if you can see that. So right in here. And volume, you had a voodoo volume signature right there. So to me, that was the entry point. You could have come in here at the 20-day line on Monday, and then you catch this pop. But what happens is you come up into this overhead price resistance and you reverse. So, as has often been the case in this market, chasing extended strength is a dumb thing to do. And even if we put a pocket pivot report out, you don't just buy it like some mindless idiot. You wait and see where it pulls into to offer a lower risk entry near an area of potential support. So, for example, if you come in here near the 50-day line, that becomes your selling guide. So if it doesn't work, you're out pretty quick. And if you're somebody who buys something and you sit there like Humpty Dumpty, sitting on the wall ready to take a big fall, you're not really thinking about what you're doing. So, you need to revisit that and understand that whenever you place a trade, you better damn well know where your stop is, where your out point is. Otherwise, you're going to get whacked, especially in some of the speculative stuff, So this one is a short. It offered a short at the 20-day line this morning. You can see here also broke down on the 620 chart right here above 44. You're now trading at 40. So you got 10% on a short here. You're coming into the 50-day line, I think. Well, you've gone through the 50-day line. You're coming into the 65-day exponential. Wait a minute. Wrong stock. Let's go to Mara here. I get these two mixed up. Yeah, you're coming into the 50-day line here. So it's possible it might find support, or it's going to do what Riot did, and that is slash right through its 50-day line, which would then trigger another short sale entry point. So if you want to deal with things objectively, and remember, I'm a trader, I'm not a promoter. I don't take sides on anything. I don't have these long-term targets or views because I contend that the future is always uncertain and there are so many factors that can come into play. You just don't know. And as a trader, I'm happy to deal with that uncertainty, and I do it by remaining objective and looking at the price volume action of everything I'm dealing with. So, the entry on Riot was on Monday morning at the 20-day line, or last Friday at the 50-day line. Trying to jump on it on, I guess that would have been Tuesday on a pocket pivot. You're a little bit late. So you need to understand that you don't want to be buying things in extended positions. And I saw a question here. Any advice on how to enter, exit volatile stocks like Riot or Mara? Like what? I just told you how to handle them. So other than that, what else is there? There's no magic to it. Would you buy MSTR back on a move through the 50-day? Well, why are you asking a question like that? That seems kind of dumb, to be frank. It's below the 50-day line. Why would I buy it? What is there here that tells me to buy it? If it shook out at the 50-day line and regained the 50-day line, then I might think about going long, but then I'd have the 50-day line to use as a selling guide. So just the question, would you buy it under the 50-day line? I mean, what is that? Do you think we have a crystal ball? So, okay, that's the first one that goes in the dumb question pile. But it gives me an opportunity to make a point, which is there are ways to handle trades, and they're objective. They're not based on somebody's opinion, especially mine or Dr. K's, because we make a lot of mistakes too, and our opinions are only worth, as much as anyone else's opinion, and that's all they are. All right, so let's look at MSTR again here. I mean, this thing's already a short. It triggered as a short at the 50-day line yesterday, and now it's pushing against the 10-day and the 20-day. If you can see that, I'll blow it up for you. But you can see what's happening here. And if it busts a 20-day line, guess what? You have a second short sale entry. End of story. I don't care how wonderful Coinbase is and how enamored the media is with it right now. Because let's face it, the media has been so late to the whole Bitcoin thing. They got all excited the first time it ran up to 20,000. They declared that Bitcoin is real, and then it went down to 3,000. Now you get the whole world telling you that Bitcoin is the be-all, end-all of everything. And maybe it is, but I don't see it on the charts of these stocks like Mara and Riot and also Silvergate. Let's look at Silvergate. So, that's my take on all this hype. And I think it's mostly hype, and you damn well better be careful if you think you're just going to step into something like Coinbase here. It's trading, what, 329? Up $1.42. Okay, ARK Asset announced that they bought 278,000 shares, I think it was, if I remember the headline. They bought it at 328.28. So yesterday's closing price. So they were probably a BOC order, buy on close order. And they take those shares there, and they're basically flat. But to me, ARK Asset has become Do you remember the kid on your Little League team? For those of you who played Little League or played softball, yeah, I know that they now allow boys and girls to play Little League, which I think is a good thing in general. But the kid who hits the home run for the first time, right? And basically they get a nice fat pitch down the middle. They take a swing at it, and their swing, the mechanics are perfect. It's a smooth swing. They're turning their hips. They have nice bat speed, and they hit the ball, and boom, it's out of the park. So they trot around the bases. All their teammates run out to greet them at home plate. They're a hero, blah, blah, blah. So the next time they come up, what do? And I used to see this on my Little League teams. They get up there, and they decided that they got to hit a home run every time they're up. And they furiously swing at the ball, forgetting the basic mechanics that helped them hit the first home run in the first place, all right? And you see, that, to me, that's what arc acid is now. They're like the kid who hit the home run, and now they're furiously swinging at anything and everything, and they're just whiffing, basically, because they've come in to add to busted positions they have in Triple D, and it's just going lower. They came in and announced that they bought it up here around the 50-day line. But if you think about this, okay, this stock, it had a huge run. It was trading down, down here you're trading at $7, $8. It had this huge run. They're going to make 37 cents a share next year. All right. So what makes them think that this thing, just because it was trading up here above 55, what God-given right does it have to go back up there based on the concept that they're going to make 37 cents a share next year? So they fall into this trap of thinking that just because something was trading up here, it has to go back up there. But no, maybe that was the top. That was the blow off. That was a spec move, and it's done. End of story. And you'll see it's pushing for lower lows. Another one that they recently announced that they bought was Palantir, and they announced it on this day. So that's 3 days ago. And it had a pop, but what happened? It just became shortable at the 50-day line. And I'll stock this kind of stuff, especially if ARK announces they doubled down on some crappy holding that's blowing up on them. I'll stock them as shorts, And I got to say, once Samara and Riot got up to the price highs that they were at, and I see that, there's a lot of spec there. If you can only have 21, and I'd like your input on this as well, Dr. K. If you can only have 21 million Bitcoins out there, I understand that's the limit. And right now there's about 18 to 19 million out there. How much more can these miners mine? And how much value do they accrue from any of that? Do they keep the Bitcoin? Does this add value, or have they had their run? Because if you look at these are also very FOMO-y as well. So, I think keep your perspective, because, yeah, things are worth whatever the market says they're worth, but there's also intrinsic value that eventually comes into play once the whole thing collapses. And if it's all built on a house of cards or a lot of air and a lot of hype, then there's danger. And I think you need to take that into account. And primarily, when you ask, how do you handle volatile stocks like Mara and Riot, you take positions as close to support as possible, and you run your stops very tight. So for me, I can flip that over on the short side. I mean, what's Mara like here? Okay, you're punching through the 20-day line. Well, if you get short at the 20-day line, your covering guide is a 20-day line. So, that's pretty simple, and that's how you handle it. So I'm hoping, I hate to disappoint you if you ask that question, you're thinking there's some magical answer. Yes, you wait for the moon to be in the 7th house and Jupiter to align with Mars. And if you see Saturn close by, that's good too. But anyways, you got something to say, Dr. K? Go ahead.
Yeah. On the miners, that's been established. First of all, there's about 4 million Bitcoin have been lost. There's only about 17 million maximum that will ever, 17 million accounted for. The 4 million lost or maybe permanently lost. And so, the number that have been mined so far, we still have a couple more million to go. These numbers, I haven't looked into this for a while, but these are the rough numbers. Now, Bitcoin miners, their mining fees will be substituted from, the fees will actually be going up in relation to price. So block size basically increases, so the fees become huge and then continue to incentivize the miners in terms of transactions. So in other words, even after all the mining's done, Bitcoin's still going to transact. You're still going to have people moving money using Bitcoin all the time. And the bigger the block, the bigger the amount, the more that miners will actually be able to make to confirm the trade, confirm the transfer, confirm the transaction. So there's always going to be a place for miners. The question is it going to be as lucrative? Well, it's interesting because miners are making more today than they ever have before. This is even after the third halving. And just because of the volumes are so much greater, so they do more volume. And let's say in the future when Bitcoin's worth $1 million, $2 million, $5 million, it's going to become a lot more even more mainstream, and it's going to become a way of transactions that the volumes are going to be huge compared to what they even are today. Today it's still pretty early on, and so again the miners will be doing so much more volume, say 5 years from now and 10 years from now, even after most of the Bitcoin has been minted. I think they mint all the way up to what 2035, 2039, I don't know, but it's a diminishing effect, but the volumes continue to increase. So that keeps the miners very happy. And the other thing is, if you do get like some slow periods, and you get them all the time, you get bear markets, well, what happens? A lot of miners go out of business. And so the stronger ones remain, and there's more of the piece of the pie that they can share amongst themselves. And it's just like when the exchanges, if you remember, they went from eighths to teenies in the 90s, and then they went from teenies to decimalization. Well, I remember eighths to teenies. A lot of the market dried. Well, when they went to decimalization, a lot of the liquidity dried up because the market makers couldn't do what they used to, so they left, and so that left fewer market makers behind, and you had a lot less liquidity. I remember, Dan Morris could buy 10% of the daily trade in any NASDAQ stock at a clip. I mean, literally in a couple minutes without moving the price more than like 1% at most. And that was when the market was at eighths. Now with decimalization, my gosh, you could barely get 1%, maybe 0.5% without moving the price quite a bit. So, the whole market really dried up as a consequence. And anyway, with crypto, I expect, we'll see, similar ways.
So then it's not true then, which is my original question, was that I've read that there's 18 to 19 million Bitcoin out there and only 21 million that can be mined. What was your answer? I was a little confused.
Yeah, I mean,
is that right? Is that a correct statement?
That is absolutely correct.
Okay.
Out of the 18, 19 million, about 4 million have been lost. And that's a correct statement. So when mining stops on that level, miners will still be making from transaction fees, and the volumes will be much greater. So arguably, miners will not take a hit. But if they did take a hit, then we'll have fewer miners. The strong ones will survive, and the weak ones will go out of business, just like in 2018 when we had that killer bear market.
Okay. Well, I guess that's the fundamental argument, which I don't really pay attention to. I'm just watching the price volume action here. And these are all breaking down. And it's curious to me that this is happening when there's so much hype over Coinbase. Anyways, we'll see how this plays out. But right now, they're shorts, and you can make money shorting them. And they could come down a fair bit.
On a short-term basis, I think, these miners move swiftly. And you can do great time value in either direction. I'm more a position trader, so I buy these, quite a while ago, and I will sell or light my position if I see that Bitcoin is looking suspicious. I mean, you get these periods where it starts to break down, like in January, and you don't want to be holding on to miners. But then it finds its floor, and then you can get back into the miners. And right now, Bitcoin has been kind of, it's moving higher. It's at new highs roughly. But if you go back to February 21st was the last good run Bitcoin had, and since then it's really been in this just sloppy sideways movement, and the miners also reflect that. The last time these miners had a good run was also right around that time, February, late February, mid to late February, and since then they've been in a basing pattern. So it looks normal. I mean, the price action, the overall structure looks as it should. Obviously, I'm keeping an eye out for any bad news on the horizon from mining or whatever, but there's nothing out there. I did see some bad stuff from BTBT and also NCTY, which is why I don't hold those. I dumped BTBT before I mean, the moment the news hit, I mean, they're under investigation, so I just took my profits. And then NCTY, they had some issue as well, and so I thought, well, you know what? I like Mara and Riot. They're the bigger brothers anyway, and their mining operations are well ahead of any other mining company that trades. So those are my two favorites.
All right. Well, what I see is a group short. And all
Yeah,
I know
short
right
term.
now is it's working, so we'll see where it goes. Anyways,
Short
let's move
term,
on
short
instead of
term, I love, you know,
fixating on
I
this.
advise.
What?
Yeah, short. It could be a nice short.
Yeah.
Absolutely.
Anyways, all right. Yeah, and then my point is that I'm just playing things as the setups. Don't get caught up in the news and the hype and all this. Just watch the charts. That's why I was surprised that ARK Asset came in and bought Coinbase yesterday at the close on what looks like a BOC order. And they just bought, they're throwing a dart here. And they're like I said, they're like the kid trying to hit a home run again. So somebody's saying, well,
Yeah, it's a little strange. I think there's a lot of, the thing about Coinbase, it is quite hyped relative to, when you look at the numbers, it doesn't pull anything close to Binance, and yet their market values are equal. So that something has to give. Either Coinbase valuation has to drop, or Binance valuation has to go up. I think Binance they're going to meet in the middle somewhere, because I think Coinbase is overvalued. Binance is way undervalued. So, that will happen. And as far as, the patterns, I mean, ultimately what, just to our listeners, what Gil's saying about, don't get caught up in the macro or, the guessing or the predictions. Just look at the charts, look at the price volume action, look at the real time. We both do that religiously. And ultimately I can have a viewpoint, but my viewpoint could change on a dime, and it often does, because I'm wrong.
Yeah.
Because the price volume tells me I'm wrong. And all that matters at the end of the day is how much did you make? How much did you do? How much did you clear in the quarter? How did you do in the year?
Right.
And it doesn't, the market doesn't care about your opinions.
Exactly.
I've got a lot of opinions, as I think Gil well knows, Gil's got his opinions too, but we're here to trade, and we got to stay real time with the actual hard data as it comes through. That's really the key lesson here.
Yeah. So, I'm kind of making what I'm seeing here, with some of these hotter names like Mara and the Riot, they're coming in. If you start to see Bitcoin break down through 60,000 to its breakout point, then maybe you've got a deeper thing going on. And I think it would also be related to a general market sell-off. So I'd watch all these things together. Speaking of which, just got my friend over here. Yeah, you got a cross down in here, 460. I just noticed I'm long this thing. And it's moving higher. So we'll see what happens here. But that's, I think this is a great vehicle, because if the market reverses, this thing probably pops, and you can come in every day and see if you want to buy it off the lows, and it goes up a little bit and then comes back in. But I think if things do start to break down, this would be one way to play it. But that's working out. Let's look at something else here. Let's look at the skew, because you have the NASDAQ leading, but basically breadth is flat, which I think is interesting. Yeah, this also crossed here at about 1065. So here we go. So watch these. I think even if you're long some things and you want to hedge and you haven't been stopped out, I think you can look at using the 620 chart to manage positions here as hedges. So you can think about that, but also at the same time, you do want to manage them, because if they don't work and the market continues higher, then you just back away and continue on your merry way. Let's see other questions here. GBTC discount to NAV meaningful, other than the fact that the GBTC is trading at a discount to NAV. So, I mean, what does that mean? You got to jump in and buy it? No, because if Bitcoin comes in and goes lower, it's going lower too. So let's see. Any other questions? Let's see what else we got here. Anything good? The Wyckofians were arguing that NVIDIA was a spring at the 200-day line. It probably was. For me, this would be it's basically a moving average undercut and rally for me. So I guess you'd call it a spring, but I don't see it coming up through any lows. In fact, once it came up through these lows, it actually failed, and now it's pushing higher, and there was resistance at the 50-day line. So yeah, that's a shakeout at the 200-day line. Not necessarily that easy to handle, because if you look at this, you can see that you shook out on this day right here, and then the very next day you broke to the downside on heavy volume. So that looked like it was failing. But then the next day it gaps up and pushes above the 200-day line, and there's another entry. So not necessarily that easy to get in on, kind of like the Mara and the Riot. Those weren't easy to get in on because they're just very volatile. We come in on Monday and they gap up and they come all the way back in. And the same thing happens over the next couple of days, and it's just very difficult. QQQ is in what Kevin Haggerty used to call a reverse symmetrical triangle. And what is that? Is that bullish or bearish? I wouldn't really get into that. Let's see. Okay, let's go. What are we looking at? You know what? I was looking at my FOMO name, my FOMO list, rather. And if you look at FOMO, these are most of the names that an outfit like ARK Asset had bought on the way up, okay? And if you just go through this, you can see most of these things, after the FOMO was done, they're coming down and they've blown apart. Here's Arcimoto. These are EV names. Ballard Power was a battery name, and that's breaking down through the 200-day line. Blink Charging, yet a pocket pivot. I'm glad we didn't put a report out on that because no pocket pivots really are working in this market. And that's telling you something. But you had a pocket pivot last Thursday, and it failed almost immediately. 2 days later, boom, it's gone. And that's going lower. C3 is another one. Canoe is another one. Churchill Capital, they bought Lucid Motors. You can see it in parentheses here. And that went lower. And Desktop Metal, it's another big one of ARCs, and it's going lower. EOSE going lower. Fisker going lower. Fusion going lower. Futu Holdings, this one's trying to post pocket pivots along the 50-day line. You have one here, or I'm sorry, where do you have one? You actually don't have any in here. You have some 5-day pocket pivots. There's one here, and you get a trade out of these, or the voodoo action coming back into the 50-day line like here. So let's blow this up. So coming in here, that becomes viable. You get a pop, but then it comes right back, and you dry up again in here, and then you pop again, and now you're coming back in. But you see how there's nothing here more than what I like to refer to as one-day wonder trades. There's nothing really sustaining, and I think that's just how this market is. But if we continue through this group, Holicity was another one. This is a space name. Jumaya, this was the African Amazon, and that had something of a FOMO move, not like some of these, but it's breaking down. Lemonade, another one, had a FOMO move into January. It's breaking down. Li Auto is breaking to lower lows. Lithium Americas, the lithium stocks were hot. Now they're not. And they're all heading lower. You see Livent breaking down today. You see, and this is, with the index is up big, okay? Lordstown Motors breaking down. Marathon Digital, well, we already talked about these are breaking down, okay? Metro Mile breaking down to lower lows. MicroStrategy, we already talked about that. It's breaking down. Nikola breaking down. NEO breaking down. Palantir breaking down. Piedmont Lithium. Now, this is one to watch here because it's triggering as a short sale at the 20-day moving average. You then use the 20-day moving average as your covering guide. Pretty simple stuff, but not necessarily, because this is a volatile stock and it will swing around on an intraday basis. I tried to borrow this. I couldn't get a borrow. QuantumScape, supposedly battery technology that's going to put Tesla out of business as far as battery technology goes, and going lower. Riot going lower. Snowflake going nowhere. Stable Roads, SRAC. This is a space ETF. I forget what this one. I think this company, what they say, if you go to their website, I'm trying to remember the name of the company, Astra or something like that. But supposedly they're building this platform that will allow you to launch rockets from space. The only problem is they don't have any real products. So, this one had a big FOMO move, and you see, I've talked about. There's this guy on Twitter up here. I said this thing's a short on Twitter, and some guys like, I'm buying more. I believe in the company. Blah 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 blah. Kathy Wood. Blah blah. All this crap. And, people just don't understand. And I don't think even ARK Asset understands that, the kid who hit the home run, they had a good swing. They got a fat pitch. And now you're just flailing. So this guy buying more, I don't know if he's buying even more now, but, all the gains are gone. And that's what happens if you don't have a sell discipline. So if you want to buy things like Mara and Riot and you don't have a sell discipline, then, you could end up in the same boat. Stratasys is like Triple D. 3D printer that had a big FOMO move, and I don't think they're going to make much money either. Tesla is a FOMO name, but it's it rallied above the 50-day line the other day, and now you're pulling into the 50-day line again. But notice that volume is up 40.8% for this time of day, so it could bust the line. Watch for that. Unity Software blown up. Virgin Galactic, another space name. and it had its move, and then it's breaking lower. It's busting the 200-day line, and it's going lower. So what happened to all the FOMO? My theory is that the retail investor is dead in the water. And what probably has happened is they all got excited last year. They're making easy money. They had the big blow off in FOMO names in January. And a lot of these people forgot that, number one, things come down. And number two, you have to pay capital gains taxes on money you make. So my theory here is that they're using their new stimulus paychecks or checks to pay their capital gains from last year because they kind of forgot about that. And they may be gains on profits they no longer have. Saw that happen in 2000 among retail investors. So Workhorse, another one going lower. XPeng, XPEV, another Chinese EV company going lower. Yalla is rolling over, triggered as a short this morning at the 10-day and the 20-day. So you can see what's going on. Is the UVXY similar to an option that, yes, it degrades 9% per month? That's the degradation percentage. So yeah, that's why you're mostly using it as a vehicle to try and catch inflection points in the indexes. So, I mean, sometimes I'll hold on to a small position as a hedge for a period of time, but you're basically, if it doesn't do anything for you, you're basically stuck losing 9% per month based on the decay, as I call it, because it is essentially based on VIX futures. So a lot of people will say, well, the VIX is up today, but the UVXY is down. It's like, well, check the futures. They're down. Anyways, would you disclose how many traders on call? As you were talking about the miners, Mara was dropping like a rock. Oh, about 80,000 people, I think. So I'm not, I went, there aren't enough to drive Mara lower. So it's going lower. It's breaking down. There's something wrong with these names, okay? Because if Coinbase is such a hot property and it indicates that the crypto space is so hot, why are these names breaking down? That's what I want to know. And why am I getting short sale signals on them that are working and giving me 10% in a flash? It's telling me something. What?
On a short-term basis, you can be profitable, but if you look at the overall chart, there's nothing wrong yet because they haven't decoupled from.
I don't really care though. I think you're making excuses for them, frankly, to be honest, because I have to go by what the market is telling me. If I go short and I have a quick 10% profit, am I wrong? Is the market saying, "Oh no"? But look at the long-term chart. That's baloney.
Not everyone has your time frame. Do you think everyone has your time frame?
My time frame is in real time, and if you have a selling discipline on the
everyone trades the way you do. No, obviously not. It's a fingerprint. Everyone's got a different style.
No, Chris, you're missing my point. You're missing my point entirely. What's your sell discipline for these stocks?
For you to say there's something wrong with these, make it sound like FUD, like, oh my God, bail out. If you're a position trader, bail out.
No, I'm saying you better have a sell discipline. Otherwise, if you are a position trader, you could get hit pretty hard. And you have to ask yourself why they're selling off on a day where they should be ebullient. And why did the market pivots fail? So that's the only thing to operate on. The idea that, oh, look at the long-term chart and you'll be fine. Yeah, that's what the idiots who are buying SRAC at $20 were saying. So, I don't agree with your take on that at all. And I don't agree that the long-term chart tells you you're okay. I disagree entirely.
You're missing my point.
Take that.
No, you got these, like something like Mara has often, if you look at the overall chart, it's often pulled down quite sharply because people bail out and it causes a lot of selling pressure. Meanwhile, Bitcoin is kind of steady. So that makes people, oh, something's wrong with the company. And then there's all these news announcements that are trying to find out why it's selling off so hard. That's just the nature of the volatility within the pattern. And I think that's what we're getting again here. We got this 2 times in March. We got it once in January. This seems like a repetition of that based on my chart eye, looking at the daily going back to the start of the year. So, I mean, in other words, I'm not alarmed, put it as in something's wrong with the company. I would say, yes, position manage and risk control. Of course, these are very volatile. So, you might have not, might not be sitting on a full position here because this thing could go lower, of course. So just be mindful of it.
Based on the 7-week rule, your 50-day line is your final selling guide. So if you violate the 50-day line, do you not adhere to that, or do you decide that the long-term prospects are just too good to be true or something? I don't know.
No, you obviously adhere to your rules.
All right,
Whatever the rules
I'm going to
are,
bet you a
you always
dollar that Mara has topped and is going to test the 200-day line. How's that? Are you on? Are you in?
let's do $1. I like it. Trading
Right
places
on.
all over.
Okay.
Done.
Yeah, that also reminds me that I think you're down by $2 on the Stanford Berkeley football game bet that we do every year for $1. Anyways,
Oh, damn.
that's okay. I'll just put
God,
it on the ledger.
I'm not surprised
But
actually.
now we suck, so now I think there'll be a chance for Berkeley to catch up at this
Yeah,
point.
let's hope so.
Anyways, not that we really care to tell you guys the truth, but we do kind of jokingly bet on that. The big game, Stanford versus Berkeley versus Cal, the Cal weenies. But anyways, I went in. Can we do an over under some of these? I don't know. All right. So what else is going? So I don't see anything I want to buy here for anything outside of a trade. And I'll even tell you that the short side, if they're working, they're working, and when they stop working, I cover, and that's it. So, for example, you look at something like Riot right now, and if I will cover at least half the position intraday because I don't operate on the basis of some macro theory. So what you have here now, you have the MACD cross here, so you could cover part of it. If it gets above the 20 period line, then you can cover the rest of it, or it may just rally up in there and then roll over again. So I think this is going to be very interesting to watch and kind of exciting. So anyways, but again, I think Coinbase probably is going to go lower because Arc Asset doesn't know what the hell they're doing, and I'm thinking it probably should come in below 300. So we'll see what happens. Anyways, any questions? Any more questions? Let's see. Well, I want Chris to talk about his selling strategies. I think that's already in the books, so I don't know what more we're supposed to tell you. You guys are a riot, somebody says. That's, of course, that's Joe. Yes, sense of humor out there. We are a riot. So, hey, we're having fun. My view is when it stops being fun, I'm not doing it anymore.
There you go. That's it. Life's too short.
Okay, what else? Let's see. Where are we? Oh, industrial metals. Let's just take a quick look here. These names were all floundering a couple weeks, so they've come up, but only recently have we seen like Alcoa is going to report after the close. Freeport was kind of floundering and it's bounced. You had a pocket pivot yesterday, but I'm not going to chase that. What I would do is watch the Alcoa earnings report this afternoon after the close and see how it affects the group. So that would include other metals plays like CMC, like I think there's, commercial metals is one. Let's take a look. Freeport possibly affect the coppers. I don't know. Tronox is hanging in there pretty tight. This is a rare earth metal stock acting pretty well compared to its cohort, MP. Steel Dynamics hanging tight. Southern Copper trying to come up. Century Aluminum, that may be affected by the Alcoa earnings. ArcelorMittal just hanging along the 10-day line. Cleveland Cliffs, you had a Bible gap up that went nowhere. Now it can't even really get going off the 20-day line. That makes it suspect. There's Alcoa coming in. U.S. Steel is now back below the 20-day line. But notice how you bounced back above the 20-day line yesterday and you reversed at the 10-day line today, and you're back below the 20-day line. So, again, you see strength of these names one day, and then it disappears, and then they come in and they look ugly for a period of time, and they test their moving averages, and they don't really bounce, but they don't break down. They're kind of sloppy and all over the place. And then finally they jerk in one direction or the other, and that lasts a day. So is Dr. K's MDM signal close to changing a cell? Well, we're waiting for Jupiter to align with Mars, and there may be about a degree or two off. So once it gets there, it'll change signal when it changes signal. We don't get advanced signals, okay? And like it's close, or it's far, or it's kind of midway. But like I said, 2 more degrees on the Jupiter-Mars alignment, and we're there. Anyways, moving along. What else do we have? Let's look at. Did you like that, Dr. K? Semiconductors. They're kind of like all over the place, and this has been an area that you got a good rally going a couple of weeks ago, and in my view, that rally was started by Intel and Micron coming out and saying that they're ramping up production to meet the chip shortage. But in my view, the chip shortage is old news. So, a lot of these names are hanging out. They look like they're trying to base, but you've got earnings coming up in the next several weeks in most cases. But you get a breakout in AMAT, it's not really going anywhere. Broadcom can't break out. It's been trying to. Brooks Automation, that's a semiconductor equipment maker. So those are the names that have been stronger, but it's breaking out. And, you got 10% on it, but that's about it right now. Some of the others are trying to break out. Diodes tried to break out. It failed. 2.6 kind of nosing above the 50-day line here. Ichor, that's another semiconductor equipment manufacturer, and it's starting to come in. But again, you have a breakout in here, sort of a double breakout, and I guess coming in about around the 50 level, and you run up. Yeah, that's a little better move. It's a thinner stock, though. Infi trying to break out, but not really. Intel failing. This may be a short coming up into the 20-day line. KLA is a semiconductor equipment maker. Notice you have the breakout. It's going nowhere. Lam Research, same thing. Lattice, not going tight sideways, but no breakout. Probably looking for some kind of move after earnings, one way or the other. But you can see, Marvell, 5G play, not really doing much. Maxim, not really doing much. So that, there's, and a lot of the pundits will come out and say, oh, semiconductors have been doing well. That's a good sign for the market. Well, I don't necessarily agree with that. I think semiconductors do well when they do well, and then they don't do well when they don't do well. And I think all these causalities and connections people like to make that are based on historical norms don't work in this market, which is well beyond any historical norms. Right now you've got absurd levels of margin debt. You have extreme bearish, an extreme low number of bulls among the AAII survey respondents. And you have an extreme percentage of bulls. You even now have the NAAI, the National Association of Active Investment Managers, NAAIM surveys showing that they're now pushing up to 85% long. So, I think that there's a lot of reasons to be cautious. And if you start to see breakdowns of certain names, they could extend, become something a lot worse. And a lot of them have, because the FOMO, as I just demonstrated, de facto, that the FOMO area of the market has long been dead and is not rising off its back, even in the face of the indexes making new highs, which I think is interesting because it tells you that the FOMO side of this market is not there. So anyways, if you look at some of these other you got Smart Global trying to push higher, but not by much. I noticed Taiwan Semi was a short near the 50-day line today. It's heading lower. You can see that right there. And so, that's what you got. So a little of this, a little of that, a lot of nothing, as my grandfather used to like to say. So I don't see anything I need to do in terms of playing it positionally. I do like some of the price velocity in some areas, but I think you have to key into a potential thematic. So I still think the Bitcoin thematic, the crypto thematic, is strong enough that it will produce price velocity in one direction or the other. And the action today demonstrates, again, de facto, that in this case for names like MAR, Riot, Silvergate, it's the downside that's working today. The other day you had the upside. Okay, so, but they're one-day wonder trades, and we'll see if we do get some sort of more concerted and correlating breakdown in the group. It'll be interesting to watch because, I just let it play out. I don't have an opinion again. I'm not in love with anything. I hate everything. Anyways, somebody says, is there a big difference among your two books? Well, I mean, if you go on Amazon and you look at the description of the books, you can't tell. The first book is basically the introduction to everything. The second one is like a workbook with some additional topics covered, mostly on psychology. And the third one is on short selling. So, if you can't figure that out from the descriptions of the books, then maybe you shouldn't read them to begin with because you may not understand anything you're reading. So that's my answer. How's that? I would read them all twice. Okay, how's that? I think you should read them all, to be honest with you. There's no single book that somehow covers it all because the last one was a short selling book. So that's my take, sir. Anyways, all obnoxiousness aside.
I would second this. Yeah.
Yeah. So
I mean,
anyway,
the first book is really, I think,
I think the first book from all the feedback I've gotten over the years is that the first book has been the most helpful for people who are of any level, whether they're beginners or advanced. They really like the first book. The second book is more of an exercise workbook, so that is useful for a lot of people. But I think if you're really experienced and you read the first book, then the second book maybe less useful. If you already have your system down and you're already profitable, I don't know, maybe you don't really need the second book. And you already understand our concepts from the first book, then you don't need the workbook from the second book. So
no, yeah, that's true. That's true. It's just, if you're just so, enraptured by our brilliance and our writing style, then you can read the second book, because, our brilliance is just all over that one as well. So anyways, so I think I've painted a picture of what's going on here. I've got to be flexible. I'm trying to figure out what news or what themes might be active on any given day and produce some price velocity that I can trade. And then that's really all I think you've got right now. I don't see any trends that are worth playing. And I think the whole Coinbase thing is kind of interesting. The chip shortage thing, I think we're going to see how that plays out as we push into earnings season, which in my view, we've had some of the financials report already, right? And if you look at the financials, they're not necessarily a happy group. Bank of America reported this morning, and guess what? They triggered as a short sell at the 10-day first and then the 20-day. BlackRock is doing well. They're the Fed's errand boy. Capital One hanging in there. Let's see. Citigroup reversing today. So look at that. That's starting to trigger as a potential short. Goldman Sachs hanging tight. But they had a strong earnings report. JP Morgan down at the 50-day line. They reported yesterday and sold off. Charles Schwab reported this morning, and they're selling off. What are interest rates doing right now? TNX is at 155. It's down 8.8 basis points. So rates are coming down, and we also have, if we look at our buddies over in the precious metals space, let's see. Well, we'll look at PHYS first. There we go. You can see that's gapping higher on a pocket pivot gap move through the 50-day line. So the metals are acting pretty well, and we've liked them recently because you had these undercut and rally moves, and you see PSLV is working on a pocket pivot based on the projected volume that we're seeing this morning. You can see that big green bar, and that would be off the 20-day line, but it's coming up to the 65-day exponential. But if we look at the miners, for example, let's go to my miners. Where are you, miners? Here you are. Okay, let's take a look at these. You got Agnico posting a pocket pivot off the 50-day line today. You see that? Very nice. Alamos popping higher. So all the metals are suddenly moving. Core mining moving higher after testing the 50-day line yesterday. And they weren't looking so hot yesterday. But the trick with the metals is if you're going to buy them, you got to buy them when they don't look so hot. First Majestic regaining the 50-day line. So, it's flashing a big blue kahuna here on my indicator bars up here. Fortuna, a big volume gap move. And gold right now is up 33.50 at 1769. So it may be this may be a big turning point for the metals at this point, and you're getting this in some of the miners. Franco-Nevada is the leader, and it has now pushed through resistance at the 200-day line. And you're working on a, let's see, that would be a pocket pivot signature, I think, or no, it'd be a 5-day. Gatos Silver, this is the weak one in the group. Kirkland pushing higher. That actually was viable. Here you had a pocket pivot at the 50-day line, then you test it successfully. Mag Silver pushing above the 50-day line. Some of these are just turning. Look at Newmont Mining. Looks like it's working on a pocket pivot off the 20-day line. Pan American Silver, same thing. Look at the big volume that we're running at right now. Projected volume would indicate a pocket pivot coming up through the 200-day line. SSR Mining. This is actually a strong name fundamentally. I've done some research into it. I am sort of a gold mining nerd, I guess. I like studying ore deposits and mine maps, etc. And these guys have some pretty good potential, and it's finally getting going here. But notice you had the undercut and rally down here through this low, and that was about a little over 2 weeks ago. Wheaton Precious Metals. So you can see this group is working. And I would think I would tend to want to go with the metals first, but you can definitely go with the miners. But again, if stocks start to come off in general, then they'll get dragged down as well. So there's a little, you got to be a little bit nimble here. You have to be careful and definitely don't chase strength. Anyways, that's all I've got for now, you guys. We've almost got a whole hour. Wow. So you can see what we're looking at here. Probably the metals look like one of the better places. I don't know if that's a positive for Bitcoin too. It may be. So anyways, that's all I've got. Thanks for showing up, everybody. We will catch you next week. So until then.
Take care, everyone. So long.
All right. Ciao.